what's happening right now is not very different from things that have happened in the past. If you look at the S&P 500 ETF, SPY, first of all, you'll see that at major market lows that I'll kind of point to here. Look at the amount of volume that was traded on those major market lows. Let's go back to 2000. Let's go to the bear market that started in 2000. And then you'll see the first low here, like basically entering into the bear market for the S&P 500 anyway. You can see a low. It's accompanied by a bunch of volume. This is kind of like January 2008, same thing. Bear market was really just getting underway. And then you see obviously 9/11 happened. You see an oversold market and big spike in volume here. And then there was a triple bottom, 1, 2, 3, and you see big volume spikes, 1, 2, and 3. Big volume spikes. So there's a lot of stock changing hands at those levels. At each one of these levels, there are people that are in the know, and you better believe these are people that manage or have billions, hundreds of billions, even trillions that they're either managing or of their own money, and that they are looking to buy stock on the cheap. They're looking to buy a stock that they wish they had got into. In hindsight, they know now that those are the stocks and the companies that are going to generate 2,000, 3,000, 50,000% returns. That means, you can 10x, 50x, 100x, 1,000x your money. They know that those are the stocks based on the time that's passed and the technology that's been built and everything that's taken place, and the company's already proven itself. They want to go back in time and buy those stocks. So knock down the stock market. In order to buy those stocks, because they're so small, without running the price up, they have to create supply. So they trick investors into selling. They don't just go on CNBC and trick Bob Jones and Sally Smith into selling their 1,000 shares of Microsoft or 1 share of Microsoft. That doesn't do anything. They do put out a lot of bearish sentiment, and then they trick the computerized programs. They trick the algorithms. You see that there is a support level right here, broke below that support level, 9/11, ran right back up above it. Came further down. Now, we can get into conspiracy theories all day long about who knew what about 9/11, but it's proven that there was some big bearish positions taken on airlines and so forth. Coming down here, again, we broke right through this support level. Algorithms were triggered because, again, the market is dominated by algorithms, and the algorithms are the ones that win. And the mutual funds, the major baskets of holdings that hold your retirement, your pension, charities, all that stuff, those are the ones that get triggered and sell once these levels are broken. So, and of course, a lot of people that are on this event right now, the retail investor, the individual investor, who's sitting there with their 5,000 shares of, Red Cat stock or something like that, they get emotional. Soundhound, right? These stocks that you could have made 20 times your money, 50 times your money, 100 times your money, they shake you out of it because they want to buy those very stocks. Soundhound's a great example with Bill because we came out with our algorithms that we have programmed saw institutional buying in Soundhound, SOUN. Stock was at $2. Our algorithm said, buy this stock right now. Institutions are buying the sector. They're buying the stock. We don't know who. We'll worry about that later. Like, we see that they're buying. Like, we'll figure out who later. Stock went from 2 to what? Like $15 very quick. What was it? $20?
Yeah, it got as high as 20 very quick. And the warrants went insane.
Right. The warrants that we recommended at the same time, because of this algorithmic trading system, went from 24 cents up to, I believe, we'll figure it out later, but they went up about
like $8.35, $8 a change or something.
Yeah. They went up pretty dramatically. So $8.35, that's 40 times your money. I think it actually went higher than that in the matter of months, a couple months. So we found out later that NVIDIA was in there buying the hell out of the stock, and a bunch of institutions that knew NVIDIA was in there also went alongside of them, started buying the stock. So we don't need to know who, why. We just know it's happening. But anyway, here, again, they trick you into selling stock. This is at a grand level. This is a massive This is the entire stock market, and this is the largest companies in the stock market, S&P 500. This doesn't even account for the other 4,500 stocks approximately that were traded at this point. They need to create supply. They trick people. They trick computers. They trick you into selling the stock. We went in over this recently. I'm going to breeze right through it because I've kind of harped on it a lot. But check it out. Triple bottom, July 02. And by the way, keep the months in mind. All right, because it's just a repeated pattern. July of 02, October of 02, and March of 03. July, October, March. Triple bottom. All right, market had a nice rally higher. 2006, we saw a signal on one of our indicators. It said institutions are starting to sell. It takes them years to get out of their positions, but we saw it right here. It wasn't just this price and volume activity, but we saw something happen in what we call the granddaddy of all technical indicators, the New York Stock Exchange BPI. I'm not going to get into it right now, but we saw the selling began, and then the market rallied, and the volume did not confirm it. It was very light. So that's just what we just saw recently before, around this time last year, it started happening. Okay, so coming back down to this, again, I said I'd breeze through it, and I'm going to keep that promise. But remember, the triple bottom we just saw, July 02, October 02, March 02, right? July, October, March. And then you could see that the levels, this triple bottom was just for intraday, in the middle of the day, basically violated in November. And that's when the stock market truly bottomed out. I'm going to go back to this right here, July bottom, October bottom. This is when the stock market, if we're being fair, and what we're calling the stock market, which is the majority of stocks or what the trend had been, that's when the stock market really bottomed out. They went down for a March low, which was, by that time, by this third low, which the S&P 500, it's an even low in the S&P 500. In the market averages, it's an even low. But in reality, most stocks had already broken out and been well off to the races. The S&P 500 lags what's really happening in the stock market. Okay, the market top that you see here, it really began in April of 1998. Most stocks were trading lower from this point on, but they pushed the biggest companies higher and ran the averages up. At this point, the market down here bottomed out, but they kept the averages down. Same thing, the July high and the October high, the averages made a double high, even a higher high in October. But in reality, most stocks were heading lower. Okay, so again, the large cap lags the rest of the stock market, and the large cap index is what everybody follows. Okay, so you go to 2008. In this case, this was the first July bottom here, but July, October, March. Okay, July, October, March. And we broke through that triple bottom from the early 2000s, triggering lots and lots of selling. So tricking investors out of the market, shaking them out of their stocks. This is what happens when you get 10 of the 10 biggest bank and brokerage firms in an office together for a week, hashing out a plan. They steal all your stock from you. They scare you out of the market. All right. So moving right along, then you have the flash crash. Long story short, supposedly technology triggered a bunch of panic selling by computers. We called the top in our articles, market bloodbath coming, disaster coming, here's how to profit, and so forth. So you had that's over here, the flash crash in 2010. And then they kept the markets down after that happened for a while, shook people out, ran the market up. 2011, same thing, shook people out, and you can see the big volume spike, shook people out, ran the market up. Here we go, and we'll skip over 2014, 2016. 2016 was a major low. You could see that there was lows set basically in 2014, 2015, and 2015 again. We got a little bit lower in 2016. That's investors purposely triggering algorithms, shaking investors out of their stock. 2018, end of the year, Trump was tough on China with tariffs. Sounds familiar, right? You can see a low here, early 2018, more lows here, early 2018. Again, that same low was tested in October. And then what happens at the end of the year? They drop it, they trigger algorithms, sell. Everybody was in a panic, and investor sentiment was overly bearish every single one of these times. 2020, look, they drop it right below this low, trigger all this selling, run it back up. It's the same trick every single time. June, July low, 20 years later, October, March. Again, June, July, October, March, similar pattern every time. All right. So here we are again. You got a stock market crash this time. It wasn't as bad as some of the historic crashes. And what you do see here is a big spike in volume. Obviously, something very big is happening. There's a lot of stock changing hands right now. If you talk to anybody right now, they're still super bearish. They're still saying the market's a bloodbath. What's going to happen is you have what's called a wall of worry. You climb the wall of worry. They're shaking investors out of stocks still. The process is almost probably done. If anything, worst case scenario, you see a quick move lower and a quick move right back up, recovery. All right. So they might do it again. I can't tell you for sure what they're going to do. I don't claim to see the future, but COVID, they knocked it down just a little bit further, rallied it back up. If they do knock it down further, like they did in 2023 and 2022 in October, that would be great if you're a buyer, but it really shouldn't be a big deal if you are just somebody who's just holding on. Okay. They might drop it back down, maybe below this level for a couple of days or something like that. That'll be the end of it. If the end hasn't already happened.